Hi, good evening. Today's February 4th. S&P 500 sold off overnight and tested the 3810 area, but it held and it was another trend day up around 1.2%, or almost 60 points. It paused a little bit around noon around SOGI 50 number, but then it broke through and made new all-time highs after a quick rip in the final 15 minutes of trading. Nasdaq was underperforming again and failed to make new highs, but it still was up around 1.3%. Russell was the leader today, up over 2.2%, also making new highs and being up around 11% for the year. Market rallied today, as Victor was saying, it will make new highs, based allegedly on the hopes of stimulus again, as Romney unveiled his plan to provide $3,000 per child, and also Democrats have promised to present some sort of plan to cancel the student debt. It's always been amazing to me that the government wants to cancel student debt, which basically large portion of it is payment for all the luxurious campus accommodations and all you can eat buffets. And of course, it's also punishment for the students who were responsible, like myself, and paid off their student debt. Maybe I should just go to school again and take another loan and have fun. Also, student debt relief statistically helps mostly middle and upper income households because most of the student loans are actually held by the graduate degrees, like doctors, lawyers, dentists, who obviously make way above average, but also have large student loans. Moving on, today, Elon Musk was back on Twitter after he was saying that he's going to take a break for a while. I guess a while could only last for him a few days. He was again pumping the Dogecoin, and he just tweeted one word message, Doge, and the image of a rocket heading to the moon, which of course sparked a surge in that joke coin, Dogecoin. Additionally, Musk have removed Bitcoin from his description on Twitter. And of course, this caused the Bitcoin to dump again. And then it recovered based on some other celebrity tweet. And now it's at break even, around 37,000. I wonder how much longer Elon Musk can keep pumping and dumping Bitcoins and other stuff, and until the regulators actually start paying attention to it. But it seems that the regulators are always going after small fish. Right now, they're investigating the Wall Street Bets Reddit crowd, and looks like they have already found their scapegoat. He's Jill, who is the former Mass Mutual employee who was known on Reddit and YouTube as the Deep Effin' Value and Roaring Kitty. He's the one who is the alleged leader of the GameStop short squeeze. He's now in hot water, and he's going to be invited to the House committee hearing, and the regulators are also looking into him because while he worked at Mass Mutual, he held some certain licenses, and I'm sure some of his tweeting is against those licenses requirements, and he can be liable for the manipulation. So it seems like I was saying yesterday, just like the regulators did with the Nat Sarao after the 2010 flash crash, they found himself a one-man scapegoat. They may just do the same thing once again, small-time trader scapegoat, and ignore all of the Stephen Cohen, Musk, hedge funds, and other tweets and manipulations. Gold futures sold off today below 1800, and silver was down again around 2%. It looks like the Wall Street Bets boys just can't get a break. Silver down, and GameStop stock is also down. It was down like another 42% to close at $53. This is the lowest close in 2 weeks, and up and down rather 90% since the record highs. It really is a sad page for many new traders who have bought into the hope and the hype of the GameStop stock. They were hoping for the riches, and now many have lost their life savings. And I just like to remind them that they're not unique, and it has happened to many traders. And this is no reason to despair, but to learn from your mistakes. it's best to just pause, stop trading, and not try to recoup the losses that you have gained. Just regroup and do not add to your losing trade in GameStop. And also just to realize that it happened to the best of them. You're just not unique in that situation. Nobody's perfect, and everybody has made their fair share of bad decisions and mistakes. It's trading, unlike what people trying to sell you, is really a very, very hard game. So it's best not to have illusions of quick riches. Well, tomorrow's jobs report, and I'm sure Victor has lots of statistics and lots of stuff to say about that.
I believe it would be best to think about why this was guaranteed to happen. There was, uh, there are many particular facets of the firmament that you discussed. It had to happen because the weak were taking on the strong, and they were upsetting the food web, where the top feeders make money at the expense of the low feeders. A very good analogy, and a very good template for what happened is when the wolves were taken away from the from the Yellowstone ecosystem. I tweeted an article, what happens when the top predator is removed from the ecosystem? And that's what happened. The members were removed. They were not making their usual money. The predators kept the beavers, and they kept all the grasses and especially they call browsing trees. They kept them in order. Elk were free to browse. This led to a decreased amount of woody browse species, aspen and cottonwood, and that led to the loss of all the bottom feeders at the bottom by the rivers. So when the wolves were removed, there was a loss of food web support for all the aquatic animals. I'm reading from the Standard Ecology book by Brauman, Hackett, and Kane. It would have been helpful if all the 6 million new traders had read that ecology book and read what the normal function between the trophic levels, between the plants, the herbivores, and the carnivores that we have been discussing.
Right.
And everything was guaranteed to happen. And more important, today was an ideal day. I played the song, It's Delightful and Delirious. What could be better? All the new traders lost on everything that they held dear, that they had hoped to make profits on. GameStop was down below 50. AMC silver was down 8 or 9%, gold, and yet the market finally hit a new high. It actually went for 5 or 6 days without a new high. The European markets hit new highs. So it was a perfect day for de rigueur, for the norm. And it was also a perfect day for woke. 50 schools in California are set to change their name, get rid of names like Abraham Lincoln and George Washington. Man is very small. The forces of progressivism are gaining traction, and the more woke we are, the better it is for the market. But you might want to know what's going to happen tomorrow. Actually, there have only been 4 times that the market has hit a new high on the Thursday before employment. And I wouldn't be surprised if and now it was up 40 points and at a new high the day before employment. So there are a lot of categorizations, a lot of splits. It's only happened once like this. It wasn't that great for the market. I mean, the market's up by Tuesday about 8 out of 9 times, but I wouldn't be surprised to see sometime during the wee hours to see it down a bit. Then it will try to come back with the employment numbers. The top feeders had a meeting with the agrarian economist who's at the head of the Treasury. So who had received an ethics dispensation. She'd only received an $800,000 fee from the top feeder who was most involved and who was most upset because of who handles 10, 15, 20% of all the trades of the market. And she was so she was free to talk to them and all the other top people at the infrastructure, presumably the head of the exchanges were there and the head of certain banks were there. I'm sure that the white shoe firm was represented in one way or another. Now, presumably, they received word as to what the employment number is going to be. She certainly, all the very top officials are fed what the employment number is on a need-to-know basis. That's why the market had such a rally at the close to close at the all-time high. You would ask me when how will you know when the market has given up the ghost, when the bull market, when old turkey's advice to that it's a bull market and stop futzing around and trying to catch a small ripple on the downside. Jim Laurie's advice: buy and hold. It isn't going to end with an all-time high like this, but I could expect a day or two of agonizing recriminations, perhaps make get the public out of the buy and hold to as much as they can, possibly even give the 6 million new traders a little hope, because the more hope they have, the easier it will be to churn them into oblivion later. So since it's only happened once, or depending upon how, I have only one time that the market was up 5 points at the close and over 35 points on the day when the day before employment, and that one time the market was down 26 points by 7 a.m. I wouldn't rush in to buy it at the all-time high. It, for I think it gave you a nice chance when it went to 38.10 today, and it hit that 38.10 the previous day, didn't go below the low. It gave you a nice 60 points, a nice 2% rally from the bottom if you had courage. Everybody's going to be talking about the Super Bowl, and I've mentioned often that the sports bettors have a lot more statistics and a lot more quantitative work on their side, of useful quantitative work. Here are some of the things that they do in the Super Bowl bets. Half of all the bets on the Super Bowl now are prop bets. So you can bet even money on any one of these prop bets, which are as popular as which team is going to win. Okay, here they are. The first score of the game, whether it will be a field goal or a touchdown. 50. Actually, you get 3-1 on that. How many points will be scored in the second half? For some reason, Brady has been starting slow. In 9 Super Bowl appearances with the Patriots, Brady's offense produced a total of 3 points in the first quarter. So you can bet even money that more points will be scored. Actually, you get 2-1 on this. More points scored in the second half. These are all, you can bet a nice $500,000 there are bookies that will take that specialize in each of these. How many second half touchdowns will there be? Here's an even bet. 3.5 touchdowns in the second half. Will there be a roughing the passer penalty? Again, that's an even bet. And as the Post says, the quarterbacks are very meek these days, and even if you touch a quarterback's helmet, you get a penalty. So they're suggesting you bet on that there will be at least one roughing the passer penalty. Will Brady hit a touchdown pass in the third quarter? Will Antonio Brown? This seems like a good bet, actually. How many receptions will he get? 4 is the even money thing, and here's an area where I think the regression fallacy, which our friend Francis Galton found. But here's a good bet. Brady suggested Brown. He targeted Brown often, but Brown had a total of only 3 receptions in the first 2 playoff games, and he missed the third game. Seems unlikely to be a major part of, so they say you should bet that he will score under 4. Then here's the same thing on Tyreek Hill. Will he receive more than 93.5 yards receiving? And here's a nice one to end it. Will the game be tied after the 0-0? And they say yes. So that's typical. All these sporting bets have been calculated, and they've taken into account the changes in the playoffs and the regression fallacy. None of this is done in the stock market. If all the 6 million new traders, instead of following the F leaders, they had taken out a pencil and paper. And by the way, that's a very important thing to actually take a pencil and paper and to count rather than doing it on the computer. And you get to learn a lot more by counting and doing it with pencil and paper, and you can do all these splits yourself. And then, of course, if you concern yourself with money management, it's the second step. So if you're not going to buy and hold, which 99% of all day traders should do, best to count. I don't have much more to say except that this was all guaranteed to happen, and I feel very sorry for all the people. I know people who have shorted GameStop up at 400, and yet they lost. And now that it's 50, it's gone down 90%. They still were able to lose because their brokers automatically liquidated them and took the opposite side of the trades themselves by raising the margin requirements. So they're having meetings to decide what the real problem is. That they try to upset the ecosystem. They try to break up the system where the public must lose. They must provide the oxygen for the rest of the system to work. So I mean, that what will be the outcome of this? The outcome will be as you say, but it's guaranteed to happen. The small boys who try to upset the system will be punished, and the regular order of things where the public provides the money to the large traders, and the large traders provide it to the infrastructure, to the banks and the market makers. That will be strengthened. That will be guaranteed to happen. But as you say, there are many lessons to be learned. I've certainly been victimized by some of these lessons myself. And what else do you have? What else do you have?
Well, no, I was just going to say about the coronavirus, because yesterday you mentioned the county in California where the virus is going up. And today I saw an interesting statistic, which I just put on the screen, a visual representation. There was some story all over the news that there is a county in Florida that people don't wear masks. And it was all over the news. And of course, the journalists got very upset. How dare people not listen, not wear masks? But when you look at actual number of COVID deaths, that orange line is actually Florida County, Collier County, and the black line is the California County, Imperial County, which is bordering Mexico, I think. And you could see that there in California, with all of the mask mandates, stay-at-home mandates, and a whole bunch of close this, close that mandates, don't go out, all of the possible mandates you could possibly have, even jail time, the number of COVID cases is still spiking. And in Florida, it's actually pretty much stable and doesn't change. So for all of those people who tell me to follow the science and wear 2 masks, I tell them wear 3, and can you explain to me why is that happening? And they really can't. They just start yelling, listen to the science and wear 2 masks. And just like with the Super Bowl that you were mentioning, CDC has issued preposterous recommendations. So when you're watching the game, try not to yell. Instead, stomp your feet and clap your hands, like in the kindergarten. I don't know how they're treating the populace these days like children, but that's exactly what they're doing. And they want to take all the fun away from people to even watching Super Bowl. And I wish for once the CDC has issued a warning for Super Bowl or otherwise, don't eat junk food, don't eat chips, don't eat sugar, don't drink Coca-Cola, because that is actually what is really bad for people's health. But instead, they're telling them don't have fun. Anyway, that's all I have today. And Victor, are you betting on the Tom Brady or for the Super Bowl? Or who do you think is going to win?
I don't bet. I'm not a gambler.
Well, for the fun of it, do you have a favorite?
I like the prop bet to against Antonio Brown's receptions. That would be my bet. If I were betting, I'd take out my pencil and paper and I calculate all the prop bets. By the way, I wonder when they'll start having prop bets in the stock market. There could be, prop bets as to what the range will be during the day, and of course, those are pretty close to the volatility bets on the options, and
Right.
whether the market will have a high of over 1%, whether the move from 12 to the close will be greater than the open to the. Of course, the regulators will probably ban prop betting on the stock market on the grounds that,
Just gambling.
on the grounds that the infrastructure is not, it's not guaranteed to win that way. And I noticed that rather than banning there's a big, the hearings in Washington are going to determine whether brokers are allowed to trade their order flow, to give their order flow to the market makers, whether that's actually should be banned. It definitely should be banned. It gives the public the impression that they're actually trading commission free, whereas in a normal year, $1.5 billion is paid to the high frequency firms that those who trade high frequency, who take the other side of the public's orders. And there'll be some stupid, ridiculous studies that show that the public actually is better off by having their brokers be paid for order flow. Actually, it's a terrible thing, but it's guaranteed to happen, that the the system will be augmented, the public will be heard, and the House will never lose. And in fact, all the changes will be designed to make the House even stronger.
Right. Like somebody said, if the product you're using is free, you are the product. It's
Very
perfect for
well.
Robin Hood.
Okay, champ. See you tomorrow.
See you tomorrow. Have a good night. Bye.
Thank you.